Hello all, I hope you are doing well in these extraordinary times. Welcome to the FinTech Finance Virtual Arena, where today we're going to be looking at one of my absolute favourite topics, which is how to build a bank from the ground up. And we're not talking building a branch, we're talking about the digital side of how to build a bank from the ground up with speed and scale straight at the front of the mind. Joining me today from Feedzai, a unicorn based out of San Mateo, we have got Pedro. How are you doing today, Pedro? How's Portugal?
Great, it's sunny out there finally, so fantastic. Everything's good.
Excellent, excellent. And then joining us, we have Jörg from SolarisBank. How are you doing? You're I want to say Berlin, but I'm very cautious saying that. Yes, yes.
Yeah, absolutely. I'm in Berlin, right? Thanks for the welcoming words. Hi, Ali. Hi, Pedro.
Excellent. Well, let's get straight into it. First of all, this is actually my first time meeting you guys, although I'm sure that our paths will cross at various kind of Money 2020s. Pedro, who are you? What do you do? What do you look after at Feedzai?
So I lead product and technology at Feedzai. What we do is we provide the cloud platform to manage financial crime across the entire life cycle. So from prevent, detect, remediate, and comply. I've been at the company ever since we started with this AI and big data approach. Back then, everything was rules, everything was very traditional. So we brought this bazooka to a spoon fight back then. I spend most of my time at customer success, so leading pre-sales, account management, activation. So I spend a lot of time with clients, and I built the organization from the ground up. And last year, I transitioned to products with the mission of creating our vision for the next 3 years, executed really well, and that's it. That's my 30-second story.
Can I just take a moment to appreciate that expression, bringing a bazooka to a spoon fight? That's fantastic. I'm definitely going to take that. Jörg, who are you? What do you do at SolarisBank, the technology company with a banking license?
Yeah, I'm actually doing similar things than Pedro does. I'm the Chief Product Officer at SolarisBank, long-term Solarian. People count me as inventory already here a little bit because I joined in the early times just right after we got our license. So I was always here while we were building our product platform. Right now we're kind of the premier banking as a service provider in Europe. And rather broad product suite ranging from accounts over cards to lending, digital assets, soon also to brokerage. Yeah, and I'm guiding the product strategy here.
Brilliant, excellent. Well, I want to talk a little bit first of all about neobanks and challenger banks. Just grab my props. There's a fair few kind of like challenger banks and neobanks out there. There's a fair few out there. The thing that I find absolutely incredible is there are niches out there. I mean, Monet's is doing incredible stuff for the underbanked. You then have, for example, Tandem Bank, which is all about going green at the moment. There seems to be a segmentation and an opportunity to have banks and banking services and solutions for every specific group, and it seems to only be growing. With so many new banks with their own kind of separate tech stacks and such, how do you enable these entrepreneurs and these banks to go out and actually achieve this? Pedro, do you want to take this first?
Sure. I mean, I think first of all, we act as a critical layer of protection for all the customers, right? If you for all of those banks, I think one of the core tenets is customer experience. They want to make sure that they have this smooth experience, this very really kind of best of breed, and you cannot do that without having a really good critical security layer behind the scenes. So that's what we do first and foremost. We also allow them to focus on that, so without having to worry about that, without having to devote engineering resources to that. Look at one as an example. The underbanked it's a big problem, not just a business problem, but also a social problem, because you have a lot of people that want access to financial services and they're not allowed to have it. And one of the reasons I believe is because they looked at a very traditional lens, right? Traditional data, traditional ways of onboarding, of allowing them to access some of those services. We've worked with a company a few years ago with a bank that wanted to go from a 50% acceptance rate to a 95% acceptance rate. And at the time, they realized that if they did nothing, then their fraud would basically, I believe, increase tenfold. So they had to redesign their entire fraud and financial crime strategy to make sure that they were allowed to get new people in and leave the fraudsters out. So this critical layer behind the scenes is critical. Doing it at a large scale and allowing it to consume this amount of digital data that is just booming. So that's what we do. We allow them to be safe. We allow them to focus on the customer, and I think they will then capitalize on that and continue to grow.
Well, I don't know, Pedro. I like the idea of, if you're a new bank starting out, you want to do it in-house. You want to have everything and just focus all of your energy on that, right?
Yeah, I think we've seen some of the people trying to build it. It's very interesting because as soon as you realize how complex it is to not just build it, but then you have to maintain it, right? It's not enough to just have something up and running. Then you need to continue to innovate, continue to adapt, continue to do more and more. So it's a huge resource hog. It's a huge resource drain. So you're much better off picking those engineering resources and really doing what you need to do, which is provide those products and focus on the customer. So we're seeing that the build is very quickly going away. Even these very known tech companies, they might have tried it once and then they came to us and said, you know what, this is too hard, it takes too much time, so we want to have this fast go-to-market. Please work with us and let's do it together.
Absolutely. Jörg, with your, again, as a service hat on, what's your take on some of these neobanks entering the market?
So in the end, it's a similar story, right? So building a bank is quite a big thing. Building a bank in all dimensions, compliance, risk, etc. It's not even so much about the inner part of a core banking system or so, but everything what is around, all the processes which are completely bulletproof, where you really want to be super stable, where you really want to be super solid. That all is a really big effort. That's an effort initially to build up the organization, which needs to get a license and fulfill all the requirements, and then it is an ongoing effort to scale such an organization and make it very efficient, automate many things on the account and cards, etc. side. So for a neobank, which is starting new on the market, or for any type of bank, or for anybody who wants to embed financial services in any way into their product offerings, building a new bank for that would be quite a big decision. While going with a provider who can take off the burden of getting the own license from their shoulders is the easier way and brings you to a quick start. And a quick start is something which we have learned in digital products in the last couple of years, that it's always important to go out quickly with something. So, and that's what people do with us. With us, you can build up a bank and bring it to market in up to 6 months maximum, even faster if you have a bit of background experience there. And then you will quickly notice that with somebody like us in the background, we will also always be more efficient because we do this already for close to 2 million accounts. So you're not starting from scratch with your first couple of accounts, but you can leverage the efficiency which we have been building over the last couple of years, where we have been investing in the end all the money we have been collecting from different venture capital and investors, and that has brought us to be a super efficient platform at a very low cost per account, cost per card level, which you can leverage to build a very dedicated, maybe more niche, maybe even not looking to millions of customer proposition, because many of those more niche propositions maybe only have a few 100,000 potential customers. And again, for that, building a full bank will be expensive.
Excellent. Just to touch on something you talked about there in terms of efficiency and automation, that there are always still various bottlenecks that happen in terms of the entire kind of process. Where do you sort of see it's always been done that way, kind of bottlenecks that we're seeing in the industry at the moment in Europe?
You mean bottlenecks in general in building banks, or in scaling?
In building banks, but also in scaling them. Where's the bottleneck that always results from that approach of it's always been done that way?
The bottlenecks happen on many different levels. It starts with in the very beginning. You will notice that your processes need to be stabilized, and you even can when you jump from a few thousand to a few 10,000 customers. While with a few thousand, you will still be able to handle some things manually. Suddenly, you have a few 10,000, a few 100,000 customers, and then manual processes don't work anymore. And suddenly, you need to invest all your resources in automating those beforehand still manual processes. At the same time, you need to keep your regulator, keep your supervisory bodies happy, who will look onto you and question your processes all the time and always force you to make them better, which is good in the end, obviously. And therefore, you will run after those sites again and have better processes, better controls, better risk management, better compliance, all those things. And you will always be running behind the newest bottlenecks which are popping up left and right in a quickly growing business.
Excellent. Pedro, could I get you to weigh in there in terms of bottlenecks within the process?
Sure, I do agree with Jörg that, I mean, there's obviously similar challenges between neobanks, digital spin-offs, and also larger FIs. What I do believe is that they were born exactly to get away from that. It's always been done that way, right? So you have the neobanks trying to come up with a completely novel approach to it. So it's not, for them, not much of a regulatory issue, more of a tech in customer, I think, approach. And even the digital spin-offs like Mox from Standard Charter or Marcus from Goldman, the reason why they create all these whole separate entities is exactly to separate them from it's always been done that way. So all of these legacy processes, all of these legacy kind of mindset and ways of doing things, they want to get away from that because that's just not how reality is and how the future is going to evolve into. So I think what they do is they are looking at it from a tech perspective. They're able to attract a lot more talent from an engineering point of view. Also, even from a business and domain point of view, I think people get excited about being able to come up with something new, something innovative. And they're just much more nimble at how they operate, much more agile. And much more cost effective. So I think what you asked before about how can we help, how can Feedzai help, how can Solaris help, I think they also look at these partners as a way to accelerate. They're not looking into doing everything in-house. They're not worried about kind of networking, IT infrastructure. They want to be as nimble and as quick as possible. So I think they're even though they do have to do some things kind of in a traditional way, they're also forcing regulators to think differently, right? They're also forcing those bodies that have been very traditional to keep up, because otherwise they will be less and less relevant.
Absolutely, I think that's hit the absolute nail on the head there in terms of, yeah, they still need to be regulated, but they still need to adhere to the regulation. One of the things that obviously has been in some of the mainstream press at the moment as well is around the profitability of neobanks. And there was a period a few years ago when you mentioned it and they all said, yep, as soon as we hit scale, we're going to be profitable. Now that they are continuing to hit that scale and starting to enter profitability, what else do you think that some of these challenger banks, some of these neobanks across the whole of Europe, yes, N26s or whoever, how do you think they should be looking to continue to gain that market share from your guys' perspective? I'll put that to yourself, Pedro, first.
Sure. I think the question is how not to gain market share, right? I think 5-6 years ago, if you look back to N26 as Revolut as an example, I think people were kind of suspicious, right? They didn't know. So when you look for a bank, you look for stability. You look for this long-term, I guess, relationship. And you had this anecdotal, I believe, study that people were more likely to change partners than change banks a few years ago. I think that's not the case anymore, or you're seeing that less and less. And so they were able to capture those early adopters, those young generations, right? That were very digital first. All they wanted is this really transparent and easy experience. And I think they proved with those that they are able to execute and they're able to continue to grow. And I think with that, if you look at the adoption curve, right? Like now they've moved from that early adopter kind of click to the general population. You're seeing older generations or more traditional generations coming in. And I'm one of those, not that old, but I was not looking at N26 and Revolut and the neobanks 5 years ago as the stable, I guess, organization. So I think they will continue to gain market share by going into different demographics, but also they will cross-sell and upsell because they're launching new products, loans, savings, etc. So they're becoming this, I think, really complete package, right? And so I think, in my view, that this is a very hard to stop trends, and you're seeing again the fact that you have the incumbents launching these digital spin-offs. It's just a recognition that this is the new normal. And I remember again, like having worked with many clients, that there was a point where people were basically dismissing these as kind of a fad or something that would go away or be absorbed by big banks. And it's interesting to see the opposite. So not only are they not being absorbed by big banks, but big banks are now trying to be more like those players. So I think it's a natural progression.
Absolutely. Jörg, can I get your thoughts on this in terms of how to scale?
So talking about how to get profitable, how to grow quicker, right? Obviously, I mean, from a very theoretical perspective, two things: costs and revenues. So cost is easy. Neobanks have a very good starting point to be very efficient in cost because they don't have all the legacy and all the human processes and maybe even the branch network, etc. All this is not needed anymore. So that puts them in a strong position in terms of cost side. On the revenue side, you will see what's happening at the moment. The old banks are reacting with price increases. So by now, suddenly, the current account costs money again. Because they don't earn money anymore on the interest rate environment, and now neobanks again can play their strength because they are more efficient, therefore they can be cheaper in the prices, but they also have the better products, typically the more targeted, the more niche, the more relevant products for specific customer groups, and therefore customers will be more happy to pay neobank, which is like offering them a product in a very clearly targeted environment and context versus the universal bank out there, which offers accounts just for everybody being average bad quality, and therefore the willingness to pay for the customers of neobanks is in many cases higher. So that leads to more efficiency, customers which you can acquire in a more like freemium model, but quickly upsell into the premium versions of the account card, whatever, where they are willing to pay and they're happy to give you 10, 20 euros per month for the very cool product, which is just better than the average bank out there. And that is the clear path to profitability and then also growth. Sounds easy, right?
Yeah, I mean, I appreciate it's probably a bit trickier to do that than it sounds, but yeah, absolutely, you hit the absolute nail on the head. I think everyone is starting to see almost. I think Monzo is obviously doing different tiers as well of the premium cards. I want to talk a little bit around the tech stack, because see, it seems to me now in 2021 that if you are to start, whether it be a completely fresh neobank or a speedboat bank, a la Mox or New 10 or whoever it may be, that you don't have to deal with things like branches. Like you hear horror stories of how some systems are still running off 5 3/4 inch floppy disks, and you think, my God. What are some of the less obvious obstacles that by working in this as a service model, if you're building a bank from the ground up, that what these obstacles that you don't even think about anymore? What are some of the kind of I know you talked a little bit about human capital, but what are some of the less obvious obstacles that a bank would traditionally face that you just don't encounter from taking the as a service approach?
So I think if you build an organization like ours on a very modern tech stack, very fresh, and also on a very agile approach, it makes many things easier. The market in the last couple of years has been developing super quickly into having specialized providers for like anything. I mean, Feedzai is a great example for something, right, which any bank needs in the background. While in the past, banks still thought they could build this by themselves. For now, we're also flexible that connecting to somebody like Feedzai for a specific solution where they have an absolute outstanding product, which is way better than what I could build myself within a reasonable amount of time, because they have spent quite some money over the last years to build that, right? And for me, modern tech stack, very flexible people, and being the owner of my roadmaps and not having the roadmaps blocked for the next 3 years for compliance topics. No, I can just devote a team for the next quarter, and quickly I've adopted and connected to a new provider which solves a specific problem on a very high quality level, and that makes me much quicker than any classical bank. I mean, talk to a classical bank and ask them to connect a provider. They will take 6 months on a pre-project studies, something with a consultant to evaluate the providers out there before they start even thinking and putting it into their tech roadmaps. And then they tell you that in 2 years, it's going to be time. So, and we are connected to something like this within 6 months from first thought to kind of go live, because we're just more flexible. And in that sense, modern technology gives you leverage on many different levels, and one being the flexibility to connect to providers. Overall, our platform hosts, I would say, close to 50-ish providers, which deliver small fragments into our processes, products, and so on, which just makes us quicker than building those things.
Yeah, I think I agree completely with Jörg. I think the first thing that you do is you build for change, right? I mean, 10, 15 years ago, there was this concept of, I mean, you don't touch things that work, right? You just kind of avoid change altogether and just keep the lights going on, and that was it. And now what we do, starting from scratch, is you have these, you know that things are going to change. You know that the industry is evolving so rapidly that what you do is you build pluggable components. You build that extensibility right out of the bed, and it's part of your core principle. That's one. Second thing is, like Jörg said, you avoid this temptation of building things by yourself. Again, you focus on what is really the core of your business. I mean, for us, and I think it's the same thing with banks, is you're not really building things in a siloed way, right? So one of the main things for us that made a difference as we were building from scratch was that we looked at data. This was a data-led problem, right? This was a data-led world. And so it made no sense to look at debit and credit cards as two separate channels. It made no sense to look at account opening as completely separate, I guess, kind of point as transactions. So the moment that you build from scratch, you get that all out of the way and really focus on what is the future and how you're solving for it. I mean, in our case, being able to do it was a groundbreaking thing at the time, but for us was so obvious, right? I mean, it made no sense to have that silo because you don't have a single channel fraudster, right? You have one person that's going to say, I'm going to dedicate myself to do a CNP or something like that. So what they do is they're jumping from channel to channel and find the weakest link. So if you're going about it in a solid way, being a bank, being a fin crime provider like we are, you're going to fail. So starting from scratch allows you to take a step back, understanding how the world is today, but how you believe the world is going to be tomorrow. And I think more importantly is you make no assumptions, right? You build your tech knowing that whatever you believe is going to happen, there's probably a 50% chance that you're wrong. So you might as well kind of factor that into the technology.
Very well said there. I know I quote this all the time, but Ben Robinson from Aperture always talks about how banks, and not even banks, just all companies used to be very much a castle, hide behind nice tall walls and know who's got keys to the server room. And now it's all about being a forest. It's all about being that that interconnected ecosystem. So you guys work together, right? Tell us a little bit about the partnership there and how, of course, you are able to kind of interconnect with each other in that ecosystem.
So maybe I start, Pedro. So for us, when we started looking into the market here, I go one step back. When we started in 2016, it was all about going to the market very quickly, and I would admit, didn't always take the super best choices for everything. One not a perfect choice we took was on the transaction monitoring side, and how we take a very close grip around our compliance processes, and especially the transaction monitoring, which is like how you observe patterns in your payment transactions. And that's what we cleaned up then last year, and started working with Feedzai to bring them in as a provider here for that specific part of our infrastructure, which is super important, which helps us finding the fraudsters earlier, finding the financial crime elements earlier, and that's where we upgraded to I would say a globally leading provider, where we can leverage also the fact that they have so many customers out there, and I'm not only looking and comparing with my own patterns, but they are comparing for me with the patterns of others as well. Therefore, I'm learning from the very big boys. Feedzai has some a little bit larger banks than we are still on their platform, which I nicely accept, because that helps us getting better quicker, and that's what matters in the end.
Yeah, I mean, also, so first of all, it's been a great experience. I think the mindset and the attitude is spot on. So I think we have the same approach to the ecosystem, to the space, the same sense of agility and just kind of mindset, just get things done. And Solaris, when we started talking, I mean, for us internally, it was such a strong proposition, such an ambitious project. We just wanted to be obviously involved and help and roll that out, because we knew that we could learn from Solaris. I think this whole bank as a service, I think, is really the future. And we also believe that we could contribute with our technology, but also with our know-how. As Jörg said, we today protect about 800 million customers worldwide. So we do have that, I guess, that knowledge in those cars and that lesson learned kind of that we can contribute to Solaris. So it's been a great partnership. It's been a great, I think, relationship, and I think we're learning from each other, which is what I love, what I see everywhere. So again, the same DNA, which is fantastic.
I like that. That's obviously the sign of a good partnership. The same kind of level of DNA there. We've got to talk a little bit about the pandemic. So I know that being cloud-based and as a service model allows you to scale up and down as needed. What are some of the kind of looking in terms of the future and future-proofing? What are some of the lessons that you guys have learned from being cloud-based over the pandemic that we could apply to anything in the future? What are some of the rather kind of unusual lessons learned? Jörg, do you want to take that first?
I think for us, the pandemic, by all social issues, etc., it caused from a pure business perspective. What we learned is that being cloud-based can help you scale quicker, because we've had an incredible run over the last couple of months, or actually 12 months. As of now, I would say 80% of our accounts have been opened in the last 12 months, so I didn't check the numbers, but that might roughly be the area. So we're growing ever quicker every month. So happy to be on cloud here to be able to scale things, and auto scaling a database also is a minor problem, which was before we started on a private cloud, and there it has been a problem, like scale a database, scale a service, and now suddenly it isn't anymore. Super cool.
Yeah, I mean, I think scale is definitely one. I think scale and I believe flexibility, right? Because you're able to make changes and decisions so much quicker. So think about, I mean, we had clients that because they were more brick and mortar, they were more kind of card present, they had a big dip for a while in terms of transaction, basically volume. And you had others that were much more digital that had a huge increase, right? So the ability to be able to divert resources, computing resources from one side to the other without having to go on a 2, 3, 4 month kind of planning cycle and hardware procurement and all of that is just fantastic, right? You can just kind of just go there and just make it happen. Like Jörg said, just the scalability, the fact that you don't have to worry about, is my database ready for this? Is my network kind of scaling at this point? Is the monitoring in place or not? So everything is much easier. And I think it's from a cost management and cost perspective, it's also much better, right? Because you don't have to worry about many other things during this, where you just focus on adjusting. Because this happened overnight, right? So you needed to focus on how to capitalize and how to help your clients, and not how to change hard disks and soft databases and upscale all that. So that flexibility was, I mean, crucial, and obviously was possible because of cloud.
I think as well, there's also a slight level of accountability, which I know CFOs and finance directors like, that is actually relatively easy to work out throughout the future, which allows them to plan and be very lean and efficient for future things.
Yeah, it's true. It's also interesting because there's the other side of the coin, which is if you're not careful, the way that cloud is set up, you can easily balloon the cost if you just kind of start going at it without that some governance as well. So there's the flip side of it as well, but definitely from a CFO perspective, not having to have your sunk costs on hardware that then has this depreciation is definitely much better. Like, so you're consuming what you need and not just having this set of resources just sitting out there because you have a project in 12 months and need to procure it on time. Definitely, it's a big plus.
On the cost management side, I think one observation is how good like basic human reaction types and social interactions help, because we've seen how teams start competing against each other and getting better and saving costs. Right? We're putting that out very publicly to all our teams and saying, what does each team pay for their services running on AWS? And suddenly teams start to optimize against each other and say, we saved more money. We got it cheaper now. We have a double number of customers, but only half the cost because we did the following. And then the next team comes and we can go down even further and scale that more efficiently. That's even becomes a game in the details, how the teams compete against each other and saving costs. Super nice for our CFO. Doing that alone, he would have never succeeded. He needs this dynamics in the hour like 20 plus for our teams.
That's a good point. You can gamify, right, and
Absolutely,
incentivize in that way.
We have a very nice dashboard on Grafana where I can see the cost for each team. And sometimes I'm poking in there and ask them, hey, like, by the way, why is your service so expensive? And you can't imagine how that bothers them if I ask that question. And a week later they will come back and tell me, yeah, we made it cheaper now.
I have images now of like big kind of like scoreboards and teams kind of like huddling around, ready to kind of sort of cheer each other up.
Yeah, kind of, and really diving into every single service and wondering, hey, why do you have so much waste, whatever, computing capacity here? Like whatever, 95% unused. That's wrong, right? So please scale differently. Or you have spikes, like once per day your service explodes. Why? Can you flatten your load somehow? What can you do to not have this whatever nightly batch run or so? Flatten it. Okay, great, they can. Just someone needs to poke them on those things.
Excellent, excellent. The last thing I want to touch on, and this is always fun, is Atom Bank has got will.i.am, Klarna has got Snoop Dogg, Santander has Ant and Dec. I'm not sure if you guys know, basically UK TV hosts. Jörg, with Solaris, and of course this is, you know, whatever you say here is gospel. If you could have any pop culture icon to kind of represent Solaris, who would it be and why?
So maybe pop culture. I go a bit back in time. I'm maybe slightly older than Pedro is. I would say R2-D2, Star Wars. That's a real icon. He is a real big help for the pilot, and that's what we want to be as well. Like for our partners. That's
a great one. That's a great one there. On the same note, Pedro. Again, no pressure after that. What about Feedzai?
It's a hard one to follow. I think I'm more of a pragmatic. So I think as a company, we've been lucky enough to have really great names associated with our events. I think at this point, given our scale and given our growth path, everyone that knows how to code, everyone that knows how to kind of do work would be gladly welcome. So not necessarily kind of a figure A or B or slide A or B. I think anyone that can do the work is more than welcome. I think R2-D2 will probably be a great asset in that regard, because I'm sure he would make big things.
Brilliant, excellent. Cool. Well, guys, thank you so much for taking the time to speak with us today. Where is the best place to reach out to you, Jörg? Are you TikTok or LinkedIn?
No, Twitter or just email would be great. Twitter is something I like a lot for talking about banking as a service.
Excellent. And Pedro, where's best to reach out to yourself?
LinkedIn. I mean, I'm completely shut off of all other social media, so LinkedIn is the only place you can find me aside from email. Obviously, I'm an email addict, so I have a very strict SLA for responses on email as well. So, but LinkedIn is the place.
Brilliant, excellent, guys. Thank you so much. We'll catch up with you all soon.